All right, good morning, everyone, and welcome back to our ninth episode of Equity Explorer. I'm Karina, as most of you may know by now, a global investment specialist at Fairtree, and I'll be moderating today's discussion. So, just to give you guys some insights on Equity Explorer, it was originally designed as a teach-in on some of the key themes in equity markets. Basically, what we're trying to do is offer deeper insights into industries, companies, and trends that are shaping global investments. So, right now, our goal is just to give you guys the tools to better understand these forces that are driving markets and potentially highlight opportunities. However, please do note that this is not financial advice and is not a deep dive into our portfolios. With that, I'm really excited to introduce today's discussion on the smartphone landscape, where our analyst Ashen will unpack Samsung and Apple. Please feel free to send through any questions during the presentation, and we'll try to answer as many as possible at the end. With that, I'd like to introduce Ashen, who will be taking us through today's deep dive. Over to you, Ash.
Thank you, Karina, and thank you to everyone who's joined the call this morning, and welcome to the next edition of Equity Explorer. So given my coverage of both Apple and Samsung, and of course the peer group, today's session will focus on the handset market in particular, and given that Apple and Samsung are the dominant players in this space, the focus of this presentation will be on these two companies in particular. All right, so the format of the presentation will I'll start with the global handset market and lay out the current landscape and the winners and losers and give a history of this market. Then I'll go into Samsung and Apple, both companies quite unique in terms of their mix and their different drivers. And then following that, there'll be some time for questions. Okay, so what I've got here is a short history of the handset market. So I think, just looking back at history, the innovation that we've seen has been incredibly impressive. So if we start in the sort of 1970s and 1980s, the first prototype for a mobile handset was designed in 1973 by Motorola. This phone weighed more than 1 kilogram and could only produce analog voice calls. And then we had continuous innovation into the late 90s and early 2000s, where we had 2G technology for the first time, which meant that users could partake in digital voice calling as well as short messages or SMSs. And then we had some initial innovation around color screens. Some of you might have used those old Nokias back in the day where we had our first color screen, which was, a very big innovation at the time. Then the smartphone revolution, which I referred to as the period of 2007 to 2013, was really led by Apple. So Apple made a very bold leap where they decided to include touchscreen technology, the first glass panel, and change the form factor quite significantly. And why this was also important was it was the first cell phone at the time which could do full web browsing. So for the first time, you had the ability to replace some of the functions that you had done on a laptop previously with your iPhone. And then at the same time, we had Google Android creating an open ecosystem. So this is just the operating system on which Android devices run. So they then, became competitors to Apple in terms of the different ecosystems, and then started to produce their own ecosystem, which was quite competitive as well. And then at the same time, we had the incumbents at the time, Nokia and BlackBerry and HTC, and there were a few others that started to decline quite rapidly because they didn't keep up with innovation. I think BlackBerry famously declined to move to a touchscreen phone for a long time, feeling that consumers preferred to have a keyboard to type on, and the start of the decline of the incumbents at the time. Then what I call the consolidation era was around 2014 to 2020, and this is where Apple consolidated market share, grew very nicely, and at the same time, Android devices running or other OEMs running Android software also started to take quite significant share. So the Android platform also emerged as a very competitive and exciting platform for users. And what we see currently is iOS platform as well as the Android platform being by far the most dominant platforms globally. And then in addition to that, we had the beginning of 4G enabled streaming and video calling, and a big jump in camera quality, battery life. And for the first time, we really started to see smartphones become an alternative to a computer. And then lastly, in sort of the current phase that we're in from the 2020s, we had the emergence of 5G technology, which allowed us to stream videos and gaming, and do AI-enabled applications or AI-enabled processes on our phones, using language models on our phones, with new AI features such as image editing and the various other new applications. And then on top of that, we had continuous design momentum, much better cameras. I think we're all aware of the phones with 3 cameras now, which significantly improve the quality of the photos that you're able to take. And then, more recently, we've seen some innovation on the foldable phone side, Samsung kind of leading with that and starting with that. And then continuous integration with wearables. So I think, many of you would possibly use the AirPods or a smartwatch of sorts, whether it be a Galaxy Watch or an Apple Watch or a competitor as well. Continuous integration with your smartphone and your wearables mean that your smartphone becomes that much more important in your daily lives. And what I've got here is just it's a little bit more detailed than the previous graph that I showed, but just the innovation that we've had from 2005 and some of the key examples that drove innovation at that time period. So in 2005, Nokia and Motorola. But what I want to sort of focus on here is the computing capabilities. So, in the early days, mobile phones could play games like Snake and other basic Java apps. And then over time, there was continuous innovation here where you're able to play 3D games like Angry Birds and use your mobile web browser a lot more. And, continuous improvement in computing capability to the point where devices can now run AI on device as well. So not purely relying on provide or data centers which run the applications for you, but these chips in the smartphones have become that much more important and that much more powerful, where you can effectively render 3D gaming, which previously you could only do with a gaming console. And then with the camera specs as well, as I talked about, we started with a 2 megapixel camera and now we're up to 48 megapixel camera with multi lenses, which means you can zoom in multiples of times and you can take professional level photographs on device. And then battery life is also a sort of interesting component here. So the original phone, some of the original phones provided 2 to 3 days of battery life, and you see that battery life hasn't improved that significantly. But I think the important part here has been that the computing capacity on these devices have improved by leaps and bounds, and at the same time, the OEMs have been able to keep relatively stable battery life. But there is continuous innovation here, and there is some exciting technology which might come out in the next few years, which mean that we might start to see mobile devices with multiple days of battery life. What's very important about the handset cycle is this replacement cycle, and this refers to the number of years which you hold onto your phone for before replacing it. And what you see here is quite interesting. It's a picture of global handset replacement, and for a number of years, from sort of 2011 till 2019, there was a very gradual increase in the replacement cycle, and that has continued to sort of accelerate. And now the replacement cycle sitting just about 4 years. And I think the reason for this has been the lack of innovation from some of the smartphones. So anecdotally, I think, many of you might feel that there haven't been significant improvements in order for you to justify changing from, for example, an iPhone 14 to an iPhone 16. You get incrementally better computing power. Maybe your phone is that much faster, your camera is slightly better, your battery is slightly better, but given the innovation hasn't really driven a need for consumers to go out and upgrade aggressively, means that this replacement cycle has elongated quite significantly. And we're at this point now, I think there's a lot of debate and discussion around AI applications on device, and when users will be encouraged to go out and replace their devices. And I think the setup is quite sort of prime for AI applications to be introduced on mobile devices, which would enable people and force people and encourage people to go out and change their phones. And we're not at this point yet. And yeah, what I've got is just some context over a few decades of annual handset units sold, so that these are volumes and not revenues. And as you would imagine, there was very strong growth from the 1990s. And over the last few years, given that it's a very mature market, volumes sold have declined as people have held onto their phones for longer. And then you might wonder what the difference between a feature phone and a smartphone is. So feature phones are your typical, your old Nokias that you'd be familiar with. And the distinction here is that they're much more basic forms of phones where it predominantly does calling, SMSs, and has very simple tools like FM radios and alarm clocks. Might have a simple camera as well, but it's unlikely to have any sophisticated excuse me, computing abilities, and often doesn't have a touchscreen. And then your smartphones obviously include more powerful devices which have effectively got many computers inside them and the ability to use applications, browse the internet, use advanced features like GPS and social media and AI assistance. So on the right, you can see that's the annual growth. And growth has been very muted for a number of years, given, like I say, it's a very mature market. And then here, what I've done is just broken it up by geography. So these are global volumes sold annually by geography, just to indicate that China is a very important market, which we watch very closely whenever Apple reports results. The Chinese revenue numbers are very important to the market because it's more than 20% of the global market. But then you've got the US, for example, which is a lot more mature. But at the same time, we have a few emerging markets which are very exciting. So India is one that really stands out. If you've listened to an Apple earnings call recently, India is often talked about and mentioned because of the growth potential in the country, where you've got a growing middle class and rising wealth levels, and the opportunity for Apple to enter the market where they've got very little market share currently. So there are pockets of growth from different geographies. So the point here is, even though the handset market on aggregate is relatively mature, there are various geographies where there's significant room for growth, and certain brands are relatively underpenetrated, and particularly your more high-end brands and your more high-end models, such as your Galaxy phones from Samsung and your iPhones as well. And then what I've got here is global market share by units sold. So again, this is units and not revenue. And what you see is, Samsung and Apple's market share have been relatively stable over the last sort of 8 years or so. And then there's been an emergence of a number of Chinese competitors. So Huawei, which we probably all familiar with. You can see that in 2021, their market share dropped off very significantly. And the reason behind this is US export controls limited Huawei from accessing components which go into these smartphones. And as a result, Huawei really struggled to ramp up production. And at the same time, they had this brand called Honor. So you can see it in the black bars further up, which really caters to a more mass market type of brand, which they then spun out in 2021 to a consortium of different investors. And the reason being that if their business was spun out and no longer owned by Huawei, Honor could access US components and continue to make smartphones. But at the same time, more recently, we have seen Huawei start to slightly increase market share, and they've been able to source chips from local manufacturers in China. So they are sort of making somewhat of a comeback, particularly in China. I think at the moment their capacity for production is relatively limited. So on a global scale, it'll take them a number of years to regain market share. But we continue to watch the competition that we're seeing from these Chinese competitors quite closely. And then previously, I've talked, a lot about annual units sold, but I think it's very important to make the distinction between unit growth and revenue growth. And on the left here, what I show is an average selling price by different OEM. So Samsung in the orange, for example, and then you see Apple with a much higher average selling price. And I think we all know that the Apple devices on average are a lot more expensive than many of the other peers. You might wonder why Samsung's average selling price is so low. The reason is, of course, that Samsung have a very wide range of products, so they really cater to various LSMs. Even though the Galaxy phone sells at comparable prices with the iPhones, they've got a large tail of other handsets, the A series, for example, which caters to more of a mass market consumer. So if you then translate your unit share into sales share using your average selling prices, you see that Apple, for example, has got a much larger revenue share compared to its unit share. And naturally, you'd expect that given the prices behind those iPhones. And then I thought, on the left here, this gives you a nice indication of various different technologies and how penetration looks and the curve of penetration and adoption over time. So these are various different technologies. And if you have a look at the smartphone market, for example, you can see that your penetration is very close to 90% at the moment. And you might wonder why penetration is at 90% and not 100%. And the reason being that there are, millions of people out there, particularly in emerging markets, which still use feature phones and not smartphones. So if you include feature phones as well as smartphones, penetration globally by population is probably very close to, if not at 100% currently. But within that as well, as I mentioned before, in terms of your technology innovation, if you look at 5G, for example, so the number of phones sold each year that have got 5G capability represents the penetration, which I show on the right. And you can see even for this relatively new technology, penetration has increased quite significantly. So, most of the new devices which are being purchased are at the leading edge of technology. Right, now I'll provide an overview of Apple. So just, to take a step back and try to, understand what Apple's all about. I think we're all very familiar with the images on the left, and that is referred to as their hardware business. It is about 2/3 of their group sales, and just over half of their gross profit, their group gross profit. So this includes, we're all familiar with the iPhones and the Macs and the iPads. Some of the slightly newer technologies over the last 5 years, 5 and 10 years, has been AirPods, for example, your watches, your HomePods, and there's a few other innovations which are coming to the market. For example, your Vision Pro headset. And then, very importantly to Apple's investment case is their services business, which often doesn't get as much attention as it deserves. And this is only about sort of a quarter of group sales and close to half of group gross profit. So the idea here is that Apple have got a host of different applications and services which they sell. We all probably are familiar with Apple TV, for example. Apple News is a lot bigger in the USA than it is in South Africa. The Apple Arcade is a gaming business. Apple Music, Apple Cloud, for example, when your phone memory is full and Apple offered to sell you a subscription for additional storage, that refers to Apple Cloud. And then, of course, on various applications in the App Store, as you purchase an application or purchase a subscription, Apple earns a commission of between 15 and 30% on every purchase made by a user. So as you can imagine, this is a business with very high fixed costs, high fixed cost base in relation to the variable cost base, which means that as you continue to scale this business, the incremental selling cost is relatively low. So your profit margins on the services businesses are closer to 75% on a gross profit level. And then I think the idea behind this slide is to talk about the fact that Apple are really just an assembler of various different hardware components. So there's a lot of detail on the left-hand side diagram, but what I want to just point out is that this diagram effectively this or shows the various different components which go into an Apple device. And almost all of these, or 90% of these components, are supplied by various other suppliers. You know, the likes of Micron, for example, which supplies a lot of its memory components. And then you've got various other component manufacturers in Asia, which supply things like the screens and the speakers and the Wi-Fi components and the batteries and the like. It's really only in Apple's main processor where where they design their own chip and then send that design to Taiwan Semiconductors to manufacture. So they've done a phenomenal job of sort of bringing together all the best components and designing a device which integrates relatively well. Um, and that's been the key part of their success. Let's just give some context of the various different revenue segments which they report. So just want to kind of highlight the fact that I mentioned earlier, or the fact that I mentioned earlier, where if you look at the services part of the business, the services revenue has compounded at north of 15% over a 5 and 10-year period. As you can imagine, it's a relatively recurring or revenue is relatively recurring in nature versus hardware, because when you purchase a subscription on the Apple App Store, for example, that is a recurring subscription which continues to renew until cancelled. And you can see your iPhone sales, for example, on the left, the graph on the left, sales are relatively, or sales growth is relatively slower compared to services, for example. So much more mature business, although it's still 50% of the business mix. You can see that services on the right, the green part of the graph on the right, services has increased from 10% in the mix in 2014 to 25% of the revenue mix in 2025, 2024. What I've done here is try to break down and break down iPhone in particular. So the light orange bar is the unit growth, it's the number of iPhones sold. The dark orange bar is revenue. So obviously revenue includes your average selling prices as well. So there's a mix effect here as well. And then the black bars are just group sales for Apple. So what you see is, I mean, as we've seen with the global handset market, unit growth has stalled in recent years, you know, barring 2021, where we had, you know, the COVID rebound and very strong demand with a lot of consumers sitting on excess capital and going out and upgrading their phones. You see various other sort of replacement cycles which I want to point out. So I think for some context here, Apple's iPhone launched in 2007, and then you had a few years of very strong growth as, you know, this was a new device to market and a very exciting form factor change. And then you saw very slow growth, or relatively slow growth in 2013, 2014. And then in 2015, Apple launched the iPhone 6 and the 6 Plus, which provided a much bigger screen size versus the previous iPhone 5. So that encouraged a lot of people to go out and upgrade. There was also a much better screen on the device. And then again in 2018, you see a bit of a spike there again. And that's when Apple launched the iPhone X or iPhone 10. And this was also a very significant redesign for Apple. So the first time that we had Face ID on device, for example, OLED screens, much wider screens, and that sort of encouraged somewhat of a replacement cycle. There's been a lot talked about, you know, Apple's balance sheet and Apple's capital utilization. So for some context, if you look at the graph on the left, that's Apple's net cash. And what you've seen is Apple continued to build significant cash balances until 2017. And then in 2018, there was a tax regulation change from the Trump administration, which allowed Apple to repatriate cash back to the USA at much more favorable tax rates. And as a result, Apple was able to repatriate this cash and use this excess cash to buy back shares. Um, and then what you see on the graph on the right is um, the orange bar is group profit growth, and then the black bar is earnings per share growth. So as Apple have bought back shares, your EPS denominator has declined, which has driven EPS growth higher than group profit growth. And this has been an incremental tailwind to Apple's share price and as Apple's EPS in particular. So as Apple start to use this cash balance, that becomes less of an incremental tailwind for shareholders. Um, and that's something to watch going forward as well. And yeah, I think something that's very important for Apple is the value of the installed base. So we often talk about the services business being high growth and an exciting business, but why it's an exciting business is because of the graph on the left, where what I've shown here is the install base of iPhones in the orange bar, and then the total install base of Apple devices in the black bar. And what this refers to is the number of devices out there globally which are actively being used. And this means that Apple have got the ability, for example, if I just refer to iPhone, the iPhone install base, they've got the ability to sell services to 1.5 billion people worldwide, which means that you can continue selling services to them even if you're not um, selling new Apple products to them or Apple hardware to them. Just the fact that they're able to continue buying services and maybe they're subscribed to various Apple services means that it is a very, very powerful effect for them. And then on the right, what I've done is estimated, I've given an estimate of the Apple services revenue split. So, we're all familiar with the App Store, for example, but then licensing is just over 20% of Apple services revenue. And what this predominantly refers to is the agreement between Google and Apple, where Google pays Apple an estimated $20 billion per annum, which is equivalent to just over 20% of Apple's group net profit. And in exchange, Google's Chrome browser is the default browser on Apple's Safari web browser. And in addition to this, Apple earns commission on ad revenue generated by Google on Apple devices. So it's a very powerful profit engine for Apple. And more recently, there's been a case between the DOJ and Google, and the DOJ has ruled that Google does not have to divest or does not have to stop paying Apple for exclusivity. So it's been a very positive ruling and a removing of an overhang for Apple. And then there's various other services in Apple's mix. Apple Care, for example, and that refers to when you purchase a new phone, for example, and you've got the ability to purchase an extended warranty for another year. iCloud, which we're familiar with. Ads is an emerging business for them. So there's various avenues of services which Apple continued to offer and kind of grow in. And yeah, what I've got is just a little timeline of Apple Intelligence. So Apple Intelligence refers to Apple's AI ambitions, and they've talked about this quite significantly at various launches more recently and on earnings calls. And the point here is we know that Apple promised very exciting AI applications and AI capabilities back in June 2024. And they've really struggled to sort of deliver on some of those promises. So they've delayed the rollout of their AI features for a number of months, and it's going into a year almost now. They also previously talked about integrating ChatGPT and various other language models onto their devices, which hasn't yet materialized. So this is something to continue watching. But at the same time, I think the important point to make here is that Apple have got an extremely valuable ecosystem. And I've talked about that big install base where they've got more than 1.5 billion iPhone users globally. Um, and we also see the example of Google paying Apple almost 20 billion or an estimated 20 billion per annum just for access to their user base. And this speaks to the sort of the importance of Apple's user base, the value of Apple's user base, and um, what it means is that there will be, and there are already a number of language models, AI language models, which are trying to partner with Apple, and Apple have admitted to doing so, which means that even though Apple are currently well behind in some of their own AI ambitions, there is an ability for them to plug in AI models from other partners, and this will help them hopefully encourage users to upgrade going forward. And then I just wanted to point out, I think there's been a number of headlines which many of you may have read around Apple, for example, delaying their new AI Siri. There's been a number of headlines around Apple losing some of their AI engineers to peers. Um, So I think we know about the delayed Apple Intelligence. I think the important part to note here is Apple's always been very conservative around launching new features and making sure that it's proven and tested before they launch it to the wider market. So we expect Apple to follow the same playbook here, and they're continuing to work on this on their own internal AI. And then in terms of losing AI talent, I think Apple have always run a very tight ship. They refuse to compete with some of the massive salaries being offered by some of the peers like Meta and the like. I think we've all seen some of those headlines. Um, but as I've mentioned, I think their ecosystem and their install base is very valuable, and there is an ability for them to catch up on their AI capabilities quite quickly. And as I've just explained now, the services business of Apple is obviously a lot more important. It's a higher growth business, a higher margin business. And this just shows the re-rating of Apple shares, so price to earnings ratio of Apple over time. And you can see there's quite a significant re-rating from 2010, from the period of 2010 to 2018 to the more recent period. And the point we want to make here is that the re-rating is justified given the services business has continued to grow very nicely. It's a high return business, a recurring revenue base, um, and therefore Apple does deserve to trade at a higher multiple than it did previously when it was more of a handset exposed business. And as I showed, there can be big replacement cycles, and there can be very relatively big swings in growth on your hardware in particular. So the fact that Apple's become a bit more defensive in their services, growing in the mix, does justify a higher multiple. So in Fairtree's global equity team in our research process, we generally classify stocks by three different categories. So we've got a quality category, we've got a defensive category, a growth category, and a cyclical category. But I think Apple's a great example of a company which has moved across different categories over time. And naturally, as companies evolve and industries evolve, companies will move across different categories as their life cycle, as they move into a new part of their life cycle. So previously, Apple was predominantly exposed to handsets, as I showed sort of just after 2007 when they launched their first iPhone, very high growth. But then we saw a very sharp cyclical decline after a few years of very strong iPhone sales. And that's why Apple, we think, was more of a cyclical growth company at that stage. And then they've now transformed into more of a defensive quality name. We can see, very strong balance sheet, very healthy returns, growing profit margins, the services business becoming more important in their revenue mix. And as a result, Apple's become more defensive name and high quality as well. So as a result, you're willing to pay a higher multiple for a quality defensive name relative to a growth cyclical name. Okay, I'll move on to Samsung now. So as I did with Apple, I've just split out revenue, the different revenue drivers for Samsung here. So Samsung is a very diversified player. As you can see, they've got consumer electronics, they've got semiconductors, and this includes memory semiconductors as well as producing semiconductors for other customers in the same way that Taiwan Semiconductors does. They've got an IT and mobile business, a very wide range of different devices catering to various LSMs. They've got a display business, which predominantly produces display panels, which go into monitors and mobile devices and laptops and the like. And then more recently, they've purchased the Harman business, and the Harman business provides infotainment systems, which go into and increasingly going into new vehicles. So for Samsung, I think what's very important here is the key drivers of the business. So if you look at the revenue growth over a 3-year, 5-year, or 10-year period, on the graph on the left, you can see that the memory and the non-memory semiconductor business, which is the foundry business, which I referred to, has been the key driver of growth for the business over 10 years. And as a result, it is the most important part or most important driver for Samsung. And then if you also look at the graph on the right, this is just operating margins by different segment. So your semiconductor business here, which includes memory as well as the foundry business, because they disclose this in one segment, you can see the profit margins earned by this business are significantly higher than your consumer electronics, for example, or your IT and mobile or display or Harman. But at the same time, you can see very sharp cyclicality in the profit margins earned by the semiconductor business. So you see, more recently in 2023, there was negative operating margins earned by the semiconductor business, and this was for two reasons. One being that the memory market was in a state of decline where there was excess supply, and as a result, memory prices declined significantly, and this business was loss making. So memory has traditionally been very commoditized. More recently, there's AI memory, which is referred to as high bandwidth memory, which is less commoditized because there's more sort of unique application and custom design for customers. But given that it's predominantly a commodity-based business, as you can imagine, when there's a significant correction in demand, prices drop at the same time, and these memory companies can become unprofitable for a period of time. There are a few more things to note on Samsung. They've got a very strong balance sheet. So on the left here, I've just got showing their cash balances. So their net cash balances, and if you can consider that as a percentage of their market cap, their cash balance as a percentage of market cap is north of 30%. So there's significant potential for them to deploy cash, either through dividends, buybacks, or potentially some M&A. So they've been very conservative with their balance sheet of, historically, but more recently, there's been in 2025, which is not shown here, there is a commitment to improve shareholder returns through additional shareholder buybacks. So this does provide a nice opportunity for shareholders to potentially share in some of the balance sheet strength which they've got. And I think when you look at Samsung, it's important to also acknowledge the governance concerns around Samsung. So, for those of you familiar with the Korean market, there are governance concerns among many of the big conglomerates in Samsung, also in South Korea. But Samsung in particular is one of those examples where I just want to flag that, for example, there's the founding family, the Lee family, which own a significant stake in the business. They've been embroiled in various scandals over time. So the chairman was jailed in 2021 for bribery of a former president, was convicted of a bribe, and was then subsequently given a presidential pardon. So the point I want to make here also is that there are various examples of this sort of governance concerns across the big conglomerates around South Korea. There has been no evidence of any untoward behavior in Samsung in particular, no allegations of fraud or anything of that sort within Samsung. So I think from that basis, we watch that very closely. But governance is a wider concern, but is important to flag. All right. Just lastly, this is a price to book. These are price to book multiples of Samsung and their main peers being SK Hynix and Micron. So you can see that Samsung's price to book multiple it has lagged peers quite significantly, and it generally the stock has at least for a number of years traded below that of its peers. And there's a few reasons to note behind this. One, as I've shown, Samsung is a diversified business with with significant exposure to low growth and low margin consumer electronics products. Whereas the peers SK Hynix and Micron are pure memory players, so purely exposed to that higher margin, more cyclical memory side of the business or memory side of the industry. And then more recently, Samsung have really struggled with their AI memory. So they tried to implement or tried to sort of start supplying some of these AI memory requirements. And there were a few different missteps which they had. There were some leadership changes over time. But more recently, there's been some very positive signs that they're starting to correct this AI business and hopefully very soon become a very important supplier to NVIDIA and AMD and some of the AI peers. But this memory cycle, it does look quite exciting at this stage. We've all heard very exciting announcements from the likes of OpenAI and Oracle and various others, which means that we like think Samsung looks quite interesting here. And yeah, we continue to like Samsung, and that's all from me today. Happy to answer any questions.
Amazing. Thank you, Ash. Maybe we can kick off with some questions. So first one, what are your thoughts on Apple's AI progress stalling and failing to keep up with peers?
Sure. All right. So, I think Apple definitely has stalled in terms of their AI. As I've mentioned, the fact that their own internal AI language models haven't come to fruition yet, as they promised in 2024. And I think very importantly, what management have now done is they've sort of toned down their promises on AI. They haven't given very strict timelines on when they're going to roll out some of these applications, which does kind of taper expectations a little bit and leave less room for disappointment. But at the same time, as I've mentioned, Apple's ecosystem is incredibly valuable, and also the user base typically spends a lot more than the average user on peer devices or peer platforms. So the fact that Google's willing to pay them 20 billion per annum for access to their user base means that Apple can theoretically quite easily plug in an AI language model from a ChatGPT or Gemini or Perplexity or any other peer, and still share in revenue upside through some sort of commission sharing agreement. So we continue to monitor it closely, but I think it isn't an exponential or it isn't a massive concern at this stage.
Brilliant, thank you. And then maybe the second lot of questions, two very similar questions here, but ultimately what they are asking is considering how important Samsung's memory or semi business is to their overall revenues and operating profits, how do they stack up against and sort of combat their competitors SK Hynix and Micron that seem to be taking the lead in that sector?
Yeah, so I think what I mentioned earlier was if you go back historically, before the AI memory and high bandwidth memory entered the market in its current form, Samsung were always the leader in terms of innovation and technology and the equipment which they introduced to manufacture their products. So they, for a long time, earned higher profit margins on their memory business than the peers. And then I think they failed to see the opportunity in the AI memory space as early as some of their peers did. And then they were stuck on a particular technology process where I think they really tried hard to make the current process work before admitting that they needed to change the design quite materially. Um, so there've been some, as I've said, some very encouraging sort of signs that they're starting to improve that business as well now. They certainly have the technical expertise, by in terms of capacity, combined capacity of memory. They've got the most capacity of all the players. Um, so they are continuing to improve on that front, and we waiting for the result coming on the 30th of October, where hopefully management will give some more color in terms of how far along they are in their latest AI memory chips and when they could potentially come to market.
Brilliant. Thanks, Ash. Yeah, I think let's leave it at that. If there are any further questions from the audience or you'd like to continue this conversation, please feel free to reach out. And yeah, to the audience, thanks again for joining. And to Ash, thank you for the great presentation. And we look forward to seeing you all back here on the 13th of November. We'll be discussing some of the oil majors, so should be a very interesting one. Thanks so much, everyone.
Thank you.